Hey everyone, it is Julie here with TipRanks. Today we're taking a look at 3 strong buy energy stocks, all priced under $10 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Like I said, today we're taking a look at energy stocks that come in with a strong buy consensus from Wall Street and are pretty cheap, priced at under $10 per share. Of course, with those cheaper prices, we can see some extra volatility as well, both up or down. So please make sure you understand the risk before investing in any stock. Now today, we're going to take a look at these companies, what it is that they do, and what those Wall Street analysts are predicting. You can learn more about these stocks on the TipRanks website or by downloading the TipRanks mobile app using the links in the description down below. Let's jump right into our 3 cheap energy stocks. First on the list today is Uranium Energy. Their stock trades under the ticker UEC and is currently priced at $6.42. The stock has grown 88% over the past year, but has cooled down in the last few months, dropping 6%. As you may have guessed from the company's name, they're in the business of uranium mining and exploration. The company says they are America's leading, fastest-growing uranium mining company and that they have the most substantial SK1300 compliant ISR resource base in the U.S. and is one of the largest resource and land holders in Canada's Athabasca Basin. They control one of the most significant uranium resource portfolios in the Western Hemisphere and also own one of the world's highest-grade ferrotitanium deposits. The company will be sharing their Q2 earnings report very soon here on March 12th, where analysts are anticipating earnings per share of 1 cent. This follows their first quarter that they shared back in December, where they did come out slightly ahead of analysts' expectations at 1 cent per share. Notably, in January, the company announced that they were restarting production at their Wyoming plant. They said that the first production is expected during August of this year. Their CEO said that this is the moment we have been working towards for over a decade, having acquired and further developed leading U.S. and Canadian assets with an exceptional, deeply experienced operations team. Uranium market fundamentals are the best the industry have witnessed, and various supply shocks have accelerated the bull market, with recent prices eclipsing the $100 per pound level. With this exciting backdrop, we are pleased to announce our production restart in Wyoming. And Wall Street analysts also seem optimistic about this news. We had a 5-star analyst from Canaccord Genuity increase their price target on the stock following the announcement. They noted the announced plan to restart uranium production in Wyoming as a positive. The UEC stock does have 4 current analyst ratings, and they all come in with a buy. That strong buy rating comes with an average price target just above $10 per share, which would be an upside potential of 58% from current prices. Looking down below, we can see our price targets range from an upside of nearly 19% all the way up to 104%. Number 2 on the list today is Obsidian Energy. They trade under the ticker OBE, currently priced just above $7 per share. Now, they did see some ups and downs in the past year. Overall, they're up 5%, but have climbed just about 2% in the last 3 months. Obsidian is a Canadian oil and natural gas production company. They are an intermediate-sized producer with a well-balanced portfolio of high-quality assets, producing around 32,000 barrels of oil equivalent per day. They develop and explore oil and gas properties and related production infrastructure in the Western Canada Sedimentary Basin. They shared their Q4 earnings report on February 21st, where the company did come out with an earnings beat. Their Q4 earnings came in at 31 cents, beating the expectations of 24 cents per share. The company saw their average 2023 production increase 5% year over year and generated funds from operation of $377.6 million. They also repurchased shares for about $47.4 million. More recently, the company provided some insight to the start of their year. The company reported a strong start to their 2024 capital program with significant production increases, including a peak rate of over 2,000 barrels of oil equivalent per day from their latest Pembina 4-well pad. The company's also seen robust performance from its Viking wells and promising initial results from the Nampa Clearwater well. Obsidian Energy has 3 current analyst ratings, and once again, we have unanimous buys. The average price target comes in at $9.79 for an upside potential of 38%. Looking down below at our 3 recent ratings, they range from an upside of 31% to 46%, so a bit of a narrower range here. And third on our list today is Crescent Energy. They trade under the ticker CPG, currently priced at $7.50 per share. Overall, the past year, they are up 21% and have climbed nearly 15% in the last 3 months. Crescent Point is another Canadian-based oil and gas company. The company focuses primarily on light oil production in southern Saskatchewan and central Alberta. They are a leading North American oil producer focused on the development of high-return resource plays. Their portfolio of products include light and medium crude oil, heavy crude oil, tight oil, natural gas liquids, shale gas, and conventional natural gas. Crescent Point does pay a quarterly dividend with an ex-dividend date coming up soon. Their current quarterly dividend comes in at 9 cents per share for a dividend yield of 3.95%, and that ex-dividend date is this week on March 14th for a payment date of April 1st. On February 28th, they shared their Q4 earnings report, where they did come out with a notable earnings beat. For their Q4, Crescent Point Energy had earnings per share of $1.26. The company also said that they transformed their portfolio, increasing premium inventory to over 20 years and enhancing their excess cash flow profile. They generated $980 million of excess cash flow in 2023. One analyst from Jefferies recently weighed in on the stock. They said that CPG is an oil-weighted producer with a diversified portfolio of assets, which over the past 5 years has reoriented and expanded via a series of transactions. More recently, they expanded their presence in Montney with the acquisition of Hammerhead Resources, completing their portfolio transformation. Crescent Point Energy has 10 current analyst ratings, and once again, we have unanimous buys. The average price target comes in at $9.76 for an upside potential of nearly 30%. Looking down below, we can see all of our ratings are in those double-digit upsides there. On the low end, we have a couple at 18% upside and a high-end one of over 47%. So that is a quick look at 3 energy stocks, all priced under $10 per share and with strong buy consensus from Wall Street. Please keep in mind these videos are never a suggestion to buy any specific stock, and these cheaper priced stocks can be extra volatile, so make sure you do your research and due diligence, understand your risk tolerance, and stick to your investment plan. Let me know which of these companies caught your eye the most in the comments. I always appreciate hearing from you guys, and have a fantastic day. I'll see you back here next time.